What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video, guys, we're going to do a follow-up video on Tokemak. Alright, guys, what's going on with Tokemak? Well, you guys already saw the video I made on Toke about 2 or 3 weeks ago, but it looks like the cat is getting out of the bag. It looks like people are starting to understand it, and Rafi, this guy, gets it. Now I'm going to go through this Twitter thread because it's straight fire, but I want to break these things down to you guys so you guys can understand it a little bit better. And, well, guys, do not sleep on the Tokemak, reactor, or whatever it is. Anyways, guys, let's go ahead and get into it. So if you guys don't already know Toke is actually tokenized liquidity. It's a simple concept, simple idea, but basically when you have Toke, you can actually vote to where liquidity goes. Now that you guys got that understanding in mind, let's go ahead and go into this. Here's what Rafi is saying. The implications in terms of game theory and tokenomics or token economics are far from simple. Yeah, they are. Most projects rely on pool 2 incentives to secure liquidity. So what does this mean? Well, say for example you have Pancake token. How does it incentivize LP? Well, it rewards people using the protocol or providing LP with Pancake token. What they're doing is they're actually increasing the supply of Pancake token and diluting the price of it. Well, it's actually diluting the market cap, I guess you can say. Because say for example it's $1 for 100 tokens and it goes to 200 tokens, you now have a $200 market cap instead of a $100. That's how you can understand it. In order to move that little ticker, you got to spend more money, so you can't have as much price pumps and price dumps. Remember, guys, that's also why I talk about stable coins needing to fake it till they make it. Now, Rafi is saying this raises a major issue of mercenary liquidity. So a project will have great liquidity as long as it's paying high pool 2 rewards, which is so true. When the farming incentives are gone, people leave. It's called parasitic farming. That's what most people do. Even then, even for LPs who are truly looking to support a long-term or support a project long-term, there's such thing as impermanent loss. So you're constantly having to monitor and adjust, especially with the Uniswap v3. If you guys have not experienced Uniswap v3, basically the TLDR on it is concentrated liquidity. Instead of being able to provide liquidity in an infinite position, you now have to specify. So say, for example, I'm providing liquidity with ETH and USDC between $3,000 and $3,400. If it goes out of those ranges, I'm getting no rewards, and I either have a large bag of ETH because it goes below 3,000 or a large bag of USDC. Not favorable in either. Well, actually, ETH is favorable in my opinion, but yeah, hey, I like ETH. So 7, this is where Tokemak enters. So Tokemak allows projects to secure sustainable liquidity by using Toke to direct liquidity towards their token. So for example, Project ABC or Project Pancake gets enough Toke and is able to vote on all the liquidity that's in that pool and says, hey, we want to vote this percentage because we own 1% of Toke. So 1% of your treasury towards us. So say, for example, the treasury is $1 billion. They can automatically send over, well, $10 million. The protocol also starts paying Toke incentives for users to deposit the ABC token into their pool. So this automatically creates buy pressure on that token itself. A good example of this was Frax. You guys probably, well, if you guys were in the Discord, you guys would have heard me chatting about Frax. And then I started tweeting about it and talking about it on Telegram as well as YouTube. But with Frax, what's interesting is now there's a bunch of buy pressure on it because there is a token reactor that's open for FXS. Now what's going to happen is people are going to deposit FXS. Instead of getting FXS rewards, aka the Frax governance token, they're going to get Toke incentives. Now what's important about this? Well, typically the people who buy a bunch of Frax are bullish on the project. So what are they going to do? Well, now they're going to take their Toke incentives, deposit them into the pool, well, the Toke pool, and say, hey, we want more liquidity coming to FXS, so send it over now. So now what happens is more people get more FXS, they deposit it into the Toke pool, they get more Toke, the Toke they deposit, they direct more liquidity. It's constant feedback loop, guys. It is like straight fire. This is where Toke is coming into play, guys. This is going to be to the point where it reaches singularity, and at this point they won't even have to give Toke incentives. Just watch my full video on Tokemak, and you guys, once you guys understand Tokemak, you'll be like, dude, I understand DeFi now. So now, why is this also important? Well, now you don't have to incentivize liquidity, because you don't have to give out your quote-unquote token or your governance ABC token, whatever you want to call it, to users. So you're not diluting everyone else. It's straight fire. It's like, whoa. And now once other farms start learning about this, all I can say is toke. Have fun. Not financial advice, guys. But what's also important is now you don't have to LP. Like, you don't, like, if you're bullish on, let's say, for example, I'm bullish on, let's just say QuickSwap, for example. And in order to earn QuickSwap rewards currently, you got to stake QuickSwap LPs into one of their farms. And there are other tokens as well. And you can earn some Quick tokens. But however, with Tokemak, now you can earn some Toke. And you can single-side stake. So you can stake your actual quote-unquote token itself and earn a yield on it. Like, you literally, like, let me give you an example of a smaller token. Like, for example, with Shapeshift, you can't single-side stake Shapeshift or Fox token. You can't do it. You have to LP with it, and that's how you can earn it. However, with Tokemak, if they get a Toke reactor, people will be able to stake Fox, not having permanent loss, and earn a yield on Toke, which is typically going to be higher than the original yield. Now that you understand the project side with Tokemak, now where are they getting these, well, I guess you can say, tokens to provide liquidity for other people? Well, Tokemak takes deposits of ETH, USDC, and from LPs. So this is in exchange for Toke rewards. If you guys look into the Tokemak protocol, they actually have different pools that you can deposit into and earn Toke. Right now it's ETH, USDC, and I think you can stake Toke, and you can also stake Toke in ETH LPs, and I think Toke in a stablecoin LP. So there's a lot of LPs you can currently use, and you can actually earn interest with them in the Toke token. However, you are exposed to impermanent loss. Tokemak has 3 layers, so when you stake in those, you actually won't have impermanent loss. They have impermanent loss protection with Tokemak. So Tokemak will have 3 layers of security. So one is the ABC reserve for the token swap above. So say, for example, when the LP or the actual protocol itself deposits their token into there in exchange for Toke, that is actually going to have a reserve that is actually quote unquote somewhat of a insurance for it, for the token swap. And the stake Toke that is used to direct liquidity or vote for it to the ABC token, this will have a layer of security as well. And also the protocol controlled assets. So say, for example, ETH and USDC reserves for people locking them up to earn Toke. These are mainly for extreme scenarios, but yes, they will build up a treasury in case there is something that happens. You know, the word in case and if, like all one word, in case and if, instead of in case and if. Why is this an ongoing feedback loop? Well, because the Toke stakers who vote to direct liquidity, aka these protocols, they want the Toke price to stay strong. So they're earning these staking rewards in Toke. So they're going to have skin in the game. So with really extreme price movements, creating major and permanent loss, the stake Toke can get slashed to cover losses. Yes, that is something you have to factor in. If you are staking Toke, there is a risk that you can get slashed, but hence why the Toke rewards are, well, nuts and ham. They're like 69% APR right now. So technically after after a year, if you auto compound it, you'll actually be able to double your money or double your Toke. Now, what's also important with Tokemak is with the amount of money that it's earning, or I guess you can say the tokens it's getting, it actually can use them in DeFi while they're sitting in the reserve and actually earn a yield. So these assets, these quote unquote protocol controlled assets, are actually earning the protocol yields itself. So eventually, over time, these LP tokens are earning rewards as well as the tokens itself earning yield. It is going to reach singularity to where at the point they don't have to incentivize other people to deposit USDC and ETH to earn toke. It'll be to the point where it's like, oh, you need this much? All right, well, we just earned this much like this month. So here, you can just take it from our yield. They get the yield, they get more tokens, and now those tokens they got, they can earn more yield on that, and now the yield they earn from that, they can use that to pay other protocols, blah, 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 blah. You guys get the point. They fake it till they make it. I'm not saying they're faking it till they make it right now, but this is the reason for a lot of these incentives. The reason to incentivize is Bootstrap Liquidity. And this is what Toke is doing as well. And what's also interesting about this is this can also be used to bootstrap any of the protocols that launch with them. Let me give you an example of this. Say, for example, I'm project ABC, and let's just call the project PancakeSwap. And I'm bullish on the protocol, and I'm basically staking it to earn toke rewards, and I'm like, and I really wish I can earn some cake rewards. Well, all that has to happen is that what you would do, instead of getting those toke rewards, you can take your quote-unquote R cake swap, because it's in the reactor, it's your R cake token. You can deposit that into, well, the protocol's pool that it creates, and what they will do is they will take your toke rewards, and exchange them for cake tokens. So now you're earning your cake that you want to earn cake. Great, good for you. But now the protocol itself is taking your toke that they just earned from you. So technically it's a swap, and they're actually depositing back into Tokemak, getting more liquidity, and it's a constant feedback loop. Thanks for tuning in. I hope that broke up a couple of things. But guys, once you understand Toke, DeFi will be like, I understand it. This is straight fire. Anyways, guys, thanks for tuning in. Hope you guys enjoyed the video. And if you guys want to watch the full deep dive I made on Tokemak, just check out my channel. I've dropped it in all in there. And if you guys want to jump in the Discord where we just discuss straight alpha, and there's some people in there that are way smarter than me, well, you guys can jump in the Discord. Links in the description below. Thanks for tuning in. Thanks for watching. Let's go and leave you guys with a wisdom one-liner. Proverbs chapter 15, verses 17. Better a small serving of vegetables with love than a fattened calf with hatred. I'm so down with that, man. I can tell you I eat too many vegetables. You see these orange hands? It is what it is. Thanks for tuning in, guys. See you in the next one. Y'all guys can also catch me on tweeters. It's at Rent a Home Fast. Like literally, at Rent a Home Fast.